वेलकम टू द न्यू सीजन ऑफ लॉन्चकास्ट. थोड़ा अपने इंट्रो देता हूँ. राइट, सो आई एम श्रेय, थर्ड ईयर नाउ फोर्थ ईयर स्टूडेंट एट VIT वेल्लोर, कंप्यूटर साइंस एंड इंजीनियरिंग. लेकिन इंजीनियरिंग उतना किया नहीं है. यू आर ऑल्सो इंजीनियर, सो यू नो. I have been interested into business because reason A, I am a Gujarati, तो typical stereotype है. Secondly, genuinely interest था. So since first year I started this podcast. Then खुद का एक स्टार्टअप किया, मून फाइनेंस, गॉट इंक्यूबेटेड एट IIM Bangalore. Then बहुत साइड प्रोजेक्ट्स किए, एंड राइट नाउ आई एम ऑल्सो इनटू प्रोडक्ट एट टिफिन. आई वुड लाइक यू कि अपना एक छोटा सा इंट्रो दीजिए विद इन 5 minutes, so people have context on who you are, what your experience is.
Great, yeah. Thanks for having me, and I think it's great to be back on doing a podcast after a long time. My name is Gautam Mahesh, basically from Bangalore, born and brought up. As I said, yeah, started off as an engineer, started doing techie stuff, being developer, etc. Moved on to kind of non-technical roles in BA as a business analyst. Went to B school. Then kind of had multiple stints at startups in mostly lending. So worked as a known product partnership, and alliances kind of roles across different fintechs, right, from SaaS companies, payments, secured lending now here, and for this with unsecured lending, both in consumer and SME lending. So yeah, I started off with the same thing that I'm a techie, like I doing things, but when I realized that hunger for trying to drive impact, trying to actually do something which is delightful to not just customers but internal users, that's how I kind of realized that I'm kind of limiting myself. Of course, it's not to say that techies don't do a good job, but again, the entire intent of doing a full stack person, trying to drive value in the ecosystem. I think that's what kind of got me into product. I think so. Otherwise, I like personally speaking, still figuring out how to be a good father and obviously a husband and a son. But yeah, 5 minutes is a lot. Happy to go into this if required.
Got it. Um, so, majority of people who start out as engineers divert into different fields, right? And specifically, I would like to ask you this question because I was going through your profile and I got to know कि आपने अपना career TCS से start किया, right? Uh, so today, if majority of people or any engineer who is going into TCS or any company in tech services, right, they feel that tech is the only thing they can do now. They limit themselves, right? कि यार I'm into tech, I can't change lines now, right? So how was your journey of moving away from TCS to then getting into product, then being a product manager 1, 2, SPM, head of product, right? What was the mental framework behind that, right? And why specifically product management?
Good question. Yeah. So I think I'll be very transparent and honest. And I set out, as you said, in TCS. So I worked on some very interesting projects in insurance and banking, and like that's where my entire domain inclination started. So for me, honestly, product management was more what I would call as an accident and a formal way, right? However, I realized when I was working a lot, actually I was doing in a way pseudo product management, right? Trying to understand requirements, what is actually happening, understand the business elements of it. So that's how my actual like foray or transitions kind of started. And around that time, again, for n number of reasons, this is basically like 2010, 11, 12. A lot of people, a lot of big companies were still looking for to hire PMs, etc., or even business roles, mostly from pedigreed B schools. And that's how I was like, hey, like if I really have to go out, ramping up quickly, right, I would let me give a shot at getting into good college, B school to be more specific, right? And that's how basically and did a bunch of case studies, like you said, worked on a lot of case studies, won a lot of case study competitions across again sales, marketing, operations, obviously tech as well, product, and that's where I kind of spoke to a lot of people, my own alumni, seniors at MDI, and that's when I realized, hey, like product looks quite interesting, and it was very relatable because I had done it a bit. My internship, I had done a lot about it around it. though technically on the role it was more on the operation side. So that's how my entire journey started, and I think it's been like a roller coaster after that. To be very honest, in terms of going, I started at a company which was which was actually where I actually got to do a lot of very high impact projects in a short time. So that I think that's how my career started off in product formally, and then I think it was just so I've always tried working at high growth companies at least, right, across my career, and entirely in fintech. My entire career lies in fintech, lending, payments mostly, right? So I think so try to kind of start looking for high growth opportunities after my B school. So that's how my started off basically as a PM1, then kind of became more like a product lead, then moved was like a AVP, then again it kind of continued, and then yeah, heading product. I think it's just a matter of grit and perseverance and patience, simple, and putting your head into what you really believe in terms of where you want to go.
Got it. No, I will try to extract the first 30 to 40 minutes, right, और majority part of this podcast आपका जितने सालों का experience है, I try to extract the mental frameworks of yours, right, basically stealing your frameworks, right. uh, I would like to know, right, which would be the hardest or the most creative product decision which you made that actually changed the trajectory of a product, right, and it was something like new, ये एक ऐसा एक ऐसा step which you took in your career for any product, right, जिसने उस product की trajectory को बदल दिया और it gained you too much of what you were looking for.
Sure. So I think, see, I mean, I'll say that compared to like a lot of people who would attribute their growth to one or two decisions, I would not. I would say that I didn't have such very spikes. I had a lot of spikes, uh, which is not like 10x or 20x, what a lot of people would have, but more like a 3x, 4x, right? Of a normal my trajectory. So there were quite a few. So one of them was when I kind of worked in a company to launch kind of a very innovative lending product due to confidentiality. I cannot go, but we went into, and this was in like 2016, 17, where we were grappling with uh, pre-digital infrastructure. UPI was not even just getting started. Payments were still very, very offline, or old school card way of doing things, etc. You didn't have all the great SaaS companies, so we went about building a very simple to understand lending product, high ticket product for customers who are not very high in credit worthiness. So I think that was one spike I would definitely say, where for me personally, growth wise, for the company, it was a massive lift in terms of business. For me, it was a massive lift in terms of actually building on the product, understanding process, operationally how to drive impact, and entire understanding the credit assessment, how it works, what needs to be done. Right? So that is one thing I can definitely say. Another one, and another one was in one of the companies where was working, where we kind of where we were giving loans to businesses, and we found out a niche opportunity where we could price, and basically through alternate data we were able to actually underwrite quickly and disburse loan up to almost 4 lakh in a matter of 6 minutes. And uh, obviously, we had help from partners, etc. It was in around 2018, 19. So there, I would say that was another very big project in terms of impact, in terms of the effort went in. And I would still say that as till date, I would say one of my, in terms of impact, the most proudest project I would say. A couple of more. One of them was obviously the entire bit of in the company before was how we went about actually building out a very strong payment infrastructure in my company that I worked for. So where literally I was the first product I had built out. Just got raised a fund also, Series B. So I think again, impact wise, took us in a very different trajectory. We grew almost 12x as a company in a matter of 4 to 5 months. Almost all the base of business product, right? So I would say these are some curves, and here also at my current company, but money were basically into LAMF. So similarly, launching our own NBFC, right, where we've been able to build one of the best, most seamless experience for customers who are looking to kind of quickly take a loan against the sector. I would say these are what I would call a spike, but definitely not, I would say, what completely changed my trajectory. But yes, it did expedite or increase my learning curve very fast.
So if so, as you mentioned कि आप इसके पहले की कंपनी के you were the first product hire, right, and you built it out from scratch, from very basics. Here at Vault Money also you are building it from scratch, you are building it for a different league, right? As a product manager with this experience, अगर आज मुझे एक product बनाना है and I want to launch it in the market, what is your framework of identifying कि where does the gap lie, and how do I define my north star metric, how do I define my top 5 metrics which I want to track, right? Because फॉर अ स्टार्टअप फाउंडर हु इज स्टार्टिंग अप, या तो कोई भी एक फर्स्ट टाइम फाउंडर, द मेजर पॉइंट वेयर दे फेल इज they track the wrong metrics, right? For example, people would track downloads on their application, but yeah, downloads आप ad से भी ला सकते हो. What matters is retention, right? That is the right metric to track. Downloads is a vanity metric. So as a product guy, what's your framework on finding your north metric and finding the metrics you want to track for your journey of building out from scratch?
Sure. So one obviously I told I don't think I'm building from scratch everything. Yes, there are a lot of new products we are launching, new major initiatives is where my team is working on things from scratch. So do we have a baseline? So I would not say it's a 0 to 1 journey, but yes, we are at, I would say, maybe more like a 6 or 7 to 20 kind of a scale, right? So I think my advice to any aspiring or budding PMs or folks who are starting off is to first be very clear about what you're trying to solve for, right? What's the problem statement that you're going after? Now, this is not specific to, no, fintech. This is not specific to any particular SaaS or a service-based company, right? The first and the foremost should be very clear why you're doing what you're doing, right? You actually have some demand, right? You're asking about North Star for me. Even a lot of the PMs even now look at North Star, as you said, active users, number of download, number of sessions. Those metrics don't matter unless you are an Instagram, you're a Meta or a Twitter. Those are vanity metrics, as you rightly pointed out. For me, it's always business. What's the danda? What's the business impact that you're going to bring to the table? So a lot of the PMs, or rather even seasoned ones that I've seen with more than 1 or 3 to 4 years experience, still tend to index on nice looking features, cool features, techy features. I would strongly say stay away from all of that. What really matters one not is what is the business impact. What you are building, is it going to bring in more revenue for your company or is it reducing cost? In the end of the day, everything boils down to just these things. That's it. Profit, and it's all about profit. Simple. Unless you're in an NGO, then it's a different, right? Or in a not-profit. So my first framework: understand the demand. Second, understand who are you building for. And I think a lot of founders, startup founders, and I've had the privilege of working, when I say not as an employee, being in that community. A lot of them try to either spread themselves too thin, and then at later stages they struggle in building, saying, okay, cool, whom do I now actually go after? Right? Because now you're trying to cater to 4 to 5 different cat target segments or personas of customer. You're not able to do just one person. So I think that is the second point. What are you solving? Who are you solving for? Second is why are you solving? And so this is very important because a lot of products, a lot of companies, a lot of startups in the market are not solving anything credible or anything which is sustainable. These are what I call as these are problems that have been created or have been positioned as problems, if I have to put it. And people and startup founders say, I'm doing this. I'm a Uber of this. I'm a AWS of this. I'm a Microsoft of this. Let's be very honest. Do really people care about you? Are a Uber of something, or a Google of something, or a Microsoft? The answer is no. People don't get an F about it. Your customer care is about what is the impact on their metrics, on their business. What is the impact that you would bring to the table? What is the value you add to the And that could be true in a B2C setup, that could be true in an enterprise company, that's true in even a SaaS. So, as I was saying, what is the problem? Who are you solving for? Why are you solving for? I think these three are the questions you need to be very. Fourth is all about thinking from a business, again, first principles, positioning. I think a lot of the PMs tend to, as I said, not think too much from a distribution perspective, just from a sales perspective, business perspective. They tend to think I'll build a product, people will love the product, they'll use the product. But what is really, really important, if you even if you get these three things right, the question is how are you going to make money? And it's not about short term or long term. You have to think in some ways. Cool, yes, there are certain companies, and as a founder, you might be able to raise funding if it's a very innovative idea and you're able to actually make money in the long term. Awesome. Grab onto that idea, but have that somewhere in the back of the mind that yes, you're doing what you're doing, but eventually you have to monetize. Even some of the most well funded startups are now trying to monetize. So I would say these are the things I would want to think of. Like you said, how much actually are you thinking? So I would say there are no top few metrics I can talk about. I would say the first and the foremost metric that you're looking is your product market. When I say product market fit, are you actually do you actually have customers who is ready to buy your product at least a reasonable price? When I say reasonable price, compared to a competitor. If you don't have a competitor, look, and again, I think competition is something people tend to think my competition so is directly like what is an Uber? Uber tends to think Ola is a competitor, yes, direct competitor. But let's be honest, there is a lot of competitors to Uber. Your rickshaw is a competitor to an Uber. The BMTC bus in Bangalore or anywhere is a competitor to an Uber. A Kirana store is a competitor to an Amazon or a Flipkart or a Zepto or any similar. So I think that is how you to model your thought process. That is there a fit? Are there people who actually would use my product and will they actually miss if I am not there? Right? That is what I would really, really anchor on. Yes, it takes time, it takes iteration, it takes a lot of time to build. But I would always want to index on building for a small set of customers, delighting them. So, which is my second. Once you have that fit, how much are you, as you rightly said, retention? How much are you able to latch on? Now, again, this depends on the product you're building. There are products, for example, in lending where honestly you can't expect retention the way I would expect in a a super app like a phone pay or a GPay or Amazon or e-commerce. Commerce apps or applications products always tend to have very high retention because frequency of usage is high. But I cannot compare my product in Volt to an app. But still, nevertheless, think from a retention. Right? So I would say it's and then naturally a flywheel. How much are you able to acquire customers? But when I say acquire, again, think from a CAC perspective, think from a sustainability perspective. As you rightly pointed out, you can do truckload of ads, do a lot of SEO, do everything, burn money only to realize that your CAC is so high you can't either you won't have the enough runway to handle it, or you will basically you're just maybe rolling out incentives which the customers are just grabbing. And so I would say these are the three things: track it, religiously keep thinking of customers, your early users, that feedback loop. And I think I would say I would not say this will guarantee success, but at least you're not going to fail.
You know, there are a few frameworks, right, which I think upon. I went to the IIM campus and we had a cohort. So this entrepreneur came and he was like, write your JTBD, right, which is job to be done. बिकॉज बहुत सारे फाउंडर्स ऐसी प्रॉब्लम सॉल्व करते हैं जो होती ही नहीं है, राइट. आई वॉन्ट टू मेक लाइक मैं कैसे ऐप बनाऊंगा विच विल सेट एन अलार्म फॉर यू थ्रू ए आई, नॉट नीडेड, राइट. आई विल मेक यू ए आई कैलकुलेटर, नॉट नीडेड, राइट. So the basic metric is baseline is JTBD, job to be done. Is your MVP or is your product doing the job which is it is going to do, right? अगर मैं पूरा फीचर से भर दूंगा बट अगर मुझे लोन ही नहीं मिल रही, दैट डजेंट मैटर. मैं दुकान खोल के बैठा हूँ बट मैं लोन दे रहा हूँ, आई एम डूइंग माई जॉब, आई एम गिविंग लोन अगेंस्ट म्यूचुअल फंड, राइट. Secondly, which you pointed out was people get flown away or they get carried away through techie features, right. कि यार let's make an interesting LLM, let's make an AI, हर जगह पे AI घुसाना है, right. Let's make the UI very cool, etc. So there was something I heard in my office last week, which was कि अगर आप 5 VP ऑफ इंजीनियरिंग को साथ बैठा दोगे ना एक फीचर के लिए, उसमें भी वो डिनाई ही करेंगे एक साथ मिलके. एक बोलेगा मुझे पाइथन यूज़ करना है, एक बोलेगा मुझे जावा यूज़ करना है. सो यू नीड समवन हु कैन टेल यू कि इट डजेंट मैटर व्हाट फीचर आर यू बिल्डिंग, कितना कूल लग रहा है वो, उसमें टेक्स्ट टेक क्या यूज़ हुआ है. द मेट्रिक इज़ क्या वो काम कर रहा है. राइट, आई कुड मेक एन एप्लीकेशन थ्रू सी प्रोग्रामिंग वर्सेज पाइथन प्रोग्रामिंग. राइट, फ़र्क कहीं नहीं पड़ता है, बस काम होना चाहिए. Right, I think that is something which startup founders need to learn, right, and that's something very harsh which I learned, right, क्योंकि when I started Moon Finance, it is an AI investment advisory. मैं पूरा बैठ के AI बनाने लगा. Me and my co-founder spent 3 months कि यार AI बनाते, ये करते, वो करते. फिर पता चला यार पहले ये तो देखते कि गैप है कि नहीं. राइट, so we then started integrating a human touch to it, started doing early revenue, then we got to know, okay, this is the PMF we want to do. I loved these metrics, right? I've noted it down for myself. What is something, right, because it happened with me, right? I was interested, I was sort of fascinated by PM title कि यार product manager है, engineers को बोलता है क्या बनाना है, right? बट ऐसी क्या चीज़ है दैट पीपल डोंट नो अबाउट प्रोडक्ट मैनेजर्स. राइट, इफ लेट्स से दे विल स्पेंड अ डे और अ वीक विथ यू, दे विल नो कि यार ये तो कभी सोचा ही नहीं था दैट पीएम ये भी करते हैं. राइट, और व्हाट इज दैट समथिंग दैट यू नो विच पीपल डोंट अंडरस्टैंड अबाउट पीएम.
Sure. No, very interesting question. Yeah. So I think one of the things I've learned as a PM is your job is not to tell people what to do or how to do. Your job is first and foremost to create impact, and that is the most critical thing, right? You're driving impact by solving problems. So that requires you to align people on the common problem statements, common goals, the objectives, those metrics. Period. There is nothing else to be done, honestly. Everything else, once you are able to do that, everything else boils down to working, which is grunt work, which is writing requirements, writing specs, signing off, UIT, etc. So I think one thing a lot of folks tend to think is I am a PM, or if I become a PM, everybody will listen to me. Let's be very honest. Most people are not going to, and neither will I listen to you. As a manager, your own manager, I'm not going to. It is your job to think critically, think in an objective manner, think in an unbiased manner, think very first principles. What is adding value? As you rightly said, customers don't care about AI. Let's be very honest. You want to build a, they care about, am I getting value out of using this product? That's it. Period. Nobody cares it's AI or it's a human in the back end telling me what to do or where I am. All I care is if I'm paying X rupees to you for advisory, am I at least going to make 20 or 30 of it? Simple. That's a simple mental framework I have in mind when if I have to think of it. So I think that is how I would want to think that as PMs, most people tend to think my job is to tell people think, but most of the time you are actually people don't listen to you. And you have to approach, assuming you will be wrong, you have to approach that a lot of people know more than you, a lot of people are smarter than you, a lot of people actually have a lot more experience and understanding how to solve the problem. So, and as a PM, I think that is what most people don't think, that my core job is to solve problems, or rather discover those problems, prioritize those problems, align that problems, and then align the approach. And this could be a different level, right? As a very senior leadership position, you are aligning very business level strategic problem to somebody starting off with solving at a very operational problem, a chat support problem or a sales problem or a communication problem. But end of that, I think that is what PMs or other budding PMs or aspiring PMs, if they sit with me, they'll understand that these are the things. Nobody listens to me. Nobody actually a lot of people know more than I do. A lot of people are smarter. A lot of people actually have a better solution. That's it.
So, job of a PM is to orchestrate between teams, I feel, and not let teams forget what are we here for. Is that correct, right? Because What I have seen is the majority of people in startups, right? We get carried away from the sexy terms. Series A startup, Series B startup. And I got angel investors on board. I am into this accelerator. I'm into this incubator, and बट आई एम फ्रॉम गुजरात एंड मैंने ऐसे ऐसे स्टार्ट कंपनीज देखी है, ऐसे धंधे देखे हैं. यू माइट दे नॉट इवन हैव अ वेबसाइट, उनके पास वेबसाइट भी नहीं है, बट दैट गाय इज अर्निंग लाइक 8 करोड़ ऑफ प्योर प्रॉफिट एवरी ईयर. एंड वो 8 करोड़ घर लेके जा रहा है. And he is gifting his employees cars, houses, right? He doesn't even have a website. So I think that is what matters rather than making a fancy website and making a fancy feature.
That's so true.
Right. Um, in your experience, right? Because you told you try to work at high growth companies, right? In your career, what actually makes great founders, right? What is that one or two traits which you noticed into founder who you look up to versus someone who is trying to start up but not able to make it, right? वो difference क्या है?
Yeah. So I think, I mean, very interesting question, and something that I myself also have been trying to understand, because I started off something, and same thing, right? I think uh, started off with very talented and seasoned people, and we couldn't make it work. So I think there is no one answer that fits all, right? At least the founders. So I worked with a lot of different types of founders, folks who had already had like 15, 16 years of 20 years of experience. I worked with founders who were uh, again like practically, for all practical purposes, just like even much younger than me. I worked with founders who like literally know exactly what they want to do for the next 10 years, and they actually have achieved what they want to do. So I think work with a diversity, and I think as a founder, uh, traits, there's no. I would like to bucket it in two, three. One, uh, clarity. I think, as I said, clarity in terms of what you want to build. And when I say build, as you rightly said, it's okay. You are doing something unglamorous. It's fine. Learn to accept it. You are here to make money. You're here, or even if you're not here to make money or create social impact, you're here to create an impact for yourself, for your employees, right? And trust me, yes, accept that fact. Not everybody might want to work with you, but you should have that clarity. Stick to that. Stick to your guns. If you genuinely believe, have that clarity of thought that you want to solve this problem. This is, and be very clear and raise a sharp focus on those problems. A lot of the founders tend to get distracted by too many, it's a shiny object syndrome. Oh, as you said, AI, something came up, I'll also plug in AI forcefully. There might legit not be any use case for an AI there. Do you want to force it because you want to show to your investors or whatever? So I think first and foremost is clarity at business level, clarity in terms of the kind of people you want to work with, clarity in terms of what you want, envisage as your definition of success. And I think this is important for any professional, not specifically for founders, but more so for founder, because you're not just accountable for yourself, but also to a lot of people, investors, your employees, your co-founders, if you have any, right? And of course, as a founder in your initial stages, you're burning midnight oil and to your family. Second, I think ability to take very hard decisions, right? I think as a founder, learn to accept that you'll not be always able to make money in every area, in every product, in everything, right? You should learn to take some hard. You might not want to jump onto a new trend because you might still be making money. You might not want to actually go and chase a certain set of customers because servicing them might not be. You might not want to expand into a new country because yes, you might make money, but for that to make money, you have to maybe have to like raise more funding, and you might not want to dilute equity, and it's okay. And I think a lot of the founders, as you rightly said, I think some of the best founders I have interacted are not the ones who are featured in online fancy podcasts. These are the people who are quietly building a job, building a good danda offline, online, wherever, and they're doing a great job. Right? I think, and they get featured, yes, but they're not really looking to feature. I think that second, but and they've taken these hard decisions. And that's why they've been insanely successful. And when I say successful, I think that's very important as a founder also, that be very clear. What is your definition? If you ask me, for me, a successful founder's definition is not your ability to raise number of funds, right? It's not about going series E, F, G, H. It's about what is the value you bring to the table for yourself, for your investors, for your employees, and what's the impact you're creating in your ecosystem, right? So this is what, and the next part is, I think, long term. I think, again, I'm not someone who's so unrealistic where I expect a founder to be aware what they want to do 10 years. Yes, if you are somebody who's coming from a relevant industry where you're starting off, or you have somebody in your family, right, who is able to guide you what they're looking for, and you have that very keen insight, yes, you can think a lot more long term. But I would at least expect a founder to have certain thought process about how you want to go about achieving. And I don't even mean strategically, right? Where do you see your company in the next 2 years, 3 years, 5 years? I think that understanding, that long term understanding, which would require trade offs in short term, is the hardest. I think that those are the attributes I would look for in a founder, right? And the last is about, it's about the most important thing for me as a professional is about people, right? Are you sure culturally what are the kind of people you want to have on board? Do you know the kind of company you're building? Like, what are the kind of people who will not join, or you don't want them to join? I think the good founders that I have worked with knew from day one what it takes to hire good people. And I say good in their context. They knew who are the candidates who came from fancy colleges, but not to necessarily hire them because they were not a good culture. They knew whom not to actually, like, not to go and optimize for fundraising. I think these are the things I have tried to understand. And like I would say, I mean, if I have to ever start up, these are the attributes I would like to find.
Got it. You know, when you were saying this, I got a question which has a lot of dilemma, right? You started off something, but it didn't work out, and then you started working at startups, right? Now you have interacted with many founders. What do you think, or in your opinion, right? I don't want a diplomatic answer here. Truly, in your mind, right? What should be done? Should a fresher directly start up, or a founder should have some years of experience working under someone? To set some context and give, my opinion on it. I started off the company and it didn't turn out to what I was expecting, right? So as I said, I know a founder who wants so much of money. I went to him, and he happens to be very good in nature, very understanding, and he explains you nicely. So I asked him that I don't know what to do, etc. He was like, I worked 15 years in a company, understanding that how are medicines sold, right? I spent 15 years as a salesman, after which I started my company, and in 7 to 8 years I made this, right? He is going to do an IPO in next 2 years, right? So that got me thinking that अगर आपको खुद का धंधा बनाना है, you should work under someone first. You should know कि लोग कैसे मैनेज होते हैं. You should know क्या challenges आते हैं. You should know how do teams are, how are teams built, and how does a team fail, right? But in your opinion, right, because we also have examples of Ritesh Agarwal, we also have examples of student founders who make it very well, right? What's your take on it? क्या करना चाहिए?
Again, yeah, I don't think there's a one and the right answer. There's no right answer, right? So, as you rightly pointed out, I have interacted with a variety of founders, personally, not as part necessarily out of my work. So, one segment of customer founders I have interacted is folks who kind of knew how they wanted to, what they wanted to do in life, like, what are the kind of idea they wanted to pursue. They might not have succeeded. I think that's a second order thing. People make mistakes. Everybody makes mistakes. Founders make mistakes. I think that's part and parcel of any career, right? Nobody can be say I will not say that I'm not making any mistakes in my career. I made a lot of mistakes in my career. So I think these first category of founders knew what they wanted to do, and this mostly came about, like you said, when there were two reasons, right? One, they worked in a company, mostly mid to large size companies, where they encountered these problems, right? And if you see, there are a lot of such companies. Razorpay was one of them. Stripe started off where basically that's how Stripe also started off, right? And that's how Airbnb basically started off. And so the founders basically themselves experienced a certain problem, and they were able to actually understand what it takes to solve it, or at least they thought they could solve it. So I think if you are in that, so is it like did they know from day one how to solve it? No, but they had that grit, etc., to solve it, and that's how they went about it. So there, yes, because it's a bit relatable, experience matters. The second type of founders who were like had nothing to do with their work. There, most of them, as you said, you don't need a subject matter knowledge, but as you rightly pointed out, running a startup or any company is all about managing people, managing finances, managing processes, managing conflict, which you will naturally learn when you actually work in an organization. So I think there is what I call as hard skills, soft skills in any role. As a founder, you need to have a lot of soft skills, managing people, culture, conflict, entire thing. I think that you will only learn when you actually are working under somebody senior, or at least in a stable or a company where you have processes, where you have some amount of processes, where you actually experience different variety of scenarios. But that said and done, if you're someone who has that conviction that hey, look, I genuinely think I can solve this problem. I have also interacted with founders who outside immediately in fourth years or later in the last years or immediately after college have graduated and have taken mentorship and solved problems. Now, yes, to be honest, that cohort is very less, right? Because again, they've gone on to make mistakes, but I still think with the right mental model, with the right mentorship, you can still solve problems out of college. But that said and done, yes, I would always recommend that always get some professional experience as an employee. In, and if you're very clever, especially you want to start up, learn the tricks of the trade, learn how to sell, learn how to manage operations, learn how to manage people, or at least if you manage, at least understand how people are managed. At least for, as you said, if not 15 years, at least 2 to 3 years, 4 years. Within a bigger company, you will need a year to just get into the system, understand how things work. At least those 2 3 years minimum is required, is what I like to think. I mean, this is my personal.
Hmm. I think 1.5 years ago or so, we were having a podcast in Bangalore only. We had Sindhu Biswal with us. He is the guy who made Filter Copy, and he was the first hire Filter Copy, Dice Media, right? Paytm Insider. So during the podcast, I asked him कि what's your framework, and बहुत ही बढ़िया चीज़ उन्होंने बोली, right? I would like to share with you. He told कि when you are building a startup, right? अपने कंपनी का 5% 5 लोगों को दे दो, 1% each. One person should be who is head of product, or someone who is very specialized in product. One guy who is specialized in marketing, branding. One guy should be a systems and operations kind of person, or one should be a finance kind of person, right? Make your board of advisors through them, right? Because it might happen that you are a first time founder, आपको नहीं पता कंपनी कैसे बनानी है. So what do? You give 1% to everyone. You make them your board of advisors, right? And I think this is very crucial for people who are first time founders. Even I feel अगर 5 साल के experience के बाद भी आप start कर रहे हो, you need mentorship. The level of mentorship differs, right? Obviously, you don't need to know basics, but you need on how to get the work done, right? So this is something which I have followed, right? Yeah, it's very interesting. In my company I got 3 people after it. I got someone who was into finance, into startups, so he knew कि कैसे legally manage करना है. I got someone who was into finance, Motilal Oswal में थे वो. So I get the stocks and equities done with my company. I got someone who is a CMO of a MNC, so he knows how to tell stories. He knows how to position yourself, right? And it helped me a lot, right? So that is something. Now, let's get specific on fintech, right? Let's get more technical. If in 1 or 2 minutes, if you were to explain LAMF, Like how you could just do that for us.
Sure, yeah. So I think so. Think of it. So a lot of the people, I think, if you told you plan your own startup in the investment space. So mutual funds is a very common way for people to invest. Right? Not everybody is the active investor in the stock market, or has the time, or has the expertise. Right? So typically, the two ways: either you give it to an advisor to kind of invest, or you basically are somebody who says, okay, these are my top few funds, and I think it makes sense, I'll invest. Assume it's been a couple of years. You basically want to go for a vacation. You need money. Now there are multiple. Now you can't always use swipe your card everywhere where you go abroad. You want to travel. So you want to go or basic. You want to buy an iPhone, or you want to buy even maybe a laptop or Mac or whatever. Maybe assume it's like a couple of lakhs. So there are multiple ways. So you've been investing. So you can liquidate, you sell, or basically you take a loan, which is basically a personal loan, like a travel loan, etc., which kind of comes at anywhere basis your profile from 12, 10, 11% can go up to 20%. Or other option is if you don't want to go that route, a lot of people sell the mutual fund. Depending again, STCG, LTCG, I'll not get into it. Plus, obviously, you lose a lot of. Now, think of it like what if you were to continue to get the benefit of compounding of the investment, but at a much competitive rate than a personal loan. Or that is, in essence, what a LAMF or a loan against fund calls for. You're getting a product which is, at least the way to look at it, you're helping you improve your credit profile. You're getting at a much better or a more competitive rate of interest, and you kind of use it and repay back when you want it. So, in essence, that's how you basically pledge the securities or your mutual funds in the name of the lender from you are taking, and that's it. Basically, you get a percentage typically, which is roughly approximately 50% of the holdings, and you repay back as per the schedule. That, in a nutshell, is your loan against. So, where you have gold, instead of a gold loan, you have mutual funds, or a property by mutual funds. That's
I think this mutual the rate of interest differ from fund to fund, right? I think the maximum is 50%. If you have debt funds, it might be for debt funds we don't get, I think, right? You get a lower rate, right, for the debt funds.
not really. Rate is not a major point. It's mostly the what you can get as a percentage LTV tends to be higher as per regulatory requirements. So we can give higher 80%. Most people give a bit lower on the debt just to avoid fluctuations if there is any case. But yes, 50% is for equity funds.
Okay. And what is the customer persona for this? Like, uh, what kind of people are buying these loans against mutual funds, right? If you were to categorize them into some cohorts, what that would be?
So I think there are different personas, as I said. So one is typically your middle-aged person, anywhere mid 30s, has has what expenses, which is education, healthcare, all of that, right? So typically, education has come out to be a very interesting use case. People don't want to basically go and take a loan, education loan for the children, which is much higher, or give guarantees against it, and for whatever reason. So education is a very middle kind of medias, which is 35 to 45. We see a lot of people taking. Uh, Typically, these are people who already have a decent investment amount, anywhere from 5 to 25, 30 lakhs, and obviously goes much higher. This is a very common pool, which is in education, healthcare, etc. Second one we've seen very interestingly is the younger segments folks, right? So typically who have already been, thanks to the influencers, investing through a lot in the mutual funds, etc. Now they basically want to kind of do purchase. So when I say purchase, they want to kind of buy a laptop, want to go travel, basically want to basically one maybe bridge financing for anything that they want to, or basically want to accessorize their car or vehicle. So these are persona which is typically anywhere from 26 to 33, 32, right? Typically married or unmarried, looking basically for quick financing. Doesn't see much merit in paying 12, a very fixed EMI basis kind of a loan, but instead just wants to quickly like, take, uh, doesn't want to go, doesn't necessarily have gold, etc. as a collateral, because it's not a persona that's there. So this is again we've seen a very common use case where this is slightly lower ticket, where typically they're looking at sub 1 lakh use case. Similarly, we have folks which is a very high end. People kind of want to use capital, pledge their collateral to kind of travel the world, basically even buy cars, even basically so they already want to buy a house. They would have gotten 80% of the property. Now they basically want for home improvement or for basically which is interiors, etc. So they see a lot of merit in pledging their collateral, getting at a very competitive rates, right? And you kind of pay. These are kind of HNIs, people who are earning well, who are holding anywhere from 50 lakhs to a few crores. So I would say these are the personas. I think, and it's constantly evolving. People keep taking for different use cases, right? I think there's no like because it's a product which is flexible, kind of instant, at least the way we offer it. We've seen that we've been getting newer requirements like emergency. Because we are able to disburse a loan at Volt in less than 10 minutes. We even had cases where people actually had healthcare problems, medical issues. People have actually just pledged their collateral, taken it, and actually paid off their hospital.
Got it. What would be the amount where LMF as a business makes money, right? Because I think when you said that people in their, sub late 20s or something would take up a sub 1 lakh loan, right? I don't think a business would make money out of it, much money out of it, right? Because the interest rates would be somewhere around 10.5%, right? So, at what ticket size does LMF in general makes money, and up to what tenure of the loan? So, if you could expand on the economics of it.
Sorry, I'll not be able to disclose much on that. But I can just say that yes, it depends a lot at the cost of your funding. It depends a lot on your from whom you are taking a loan as a customer or as a lender, who you are lending, so that you can lend at higher rate. It depends on the product structure, whether you're doing a credit line or you're kind of doing a term loan, etc. So each lender has their own economics, and that there's no one size, no one right answer, and obviously due to confidentiality.
Got it. And for a business, doesn't it make it a bit riskier that, let's say, I took a loan at 1 lakh worth of pledged mutual funds, but when I'm repaying it, the market crashed off and the mutual funds are worth way less than the amount for which I took up a loan, right? So, how do you mitigate this risk of losing on the value of mutual funds which you have?
Sure. No, so typically, and I mean that happens. So that is where the entire LTV, right, loan to value kind of comes in, right? So we have 50%, which is the regulatory cap, kind of gives us a lot of comfort. So and we as a LSP as well as the NBFC, we kind of have kept a even slightly more buffer on it to avoid these kind of fluctuations. So most of the times we've not actually had these challenges where customer has to kind of like not been able to service the loan because there is ample amount of liquidity. Of course, we've had customers who've not been able to service tell us that please sell my holdings because I don't have the money to pay. Or there is something called as a shortfall, etc., where when we do reach out to customers saying, hey, look, the LTV is breaching what the limits is. Please, either pay us back or pledge more collaterals to make sure we are compliant. So I think that's how we've been able to manage operationally, risk wise, and compliance.
Got it. And so, what are the channels currently uh, through which these people find out about LMF? Because I feel that, and I've seen it that loan is something which all fintechs are suddenly getting into. Right? We have MoneyView, Grow is getting into personal loans, Volt Money, MyFi, where I work. Right? We also provide LMF. So I've seen that people are suddenly moving towards taking loan. They are getting comfortable with debt, right? So what is the economics behind this, right? Why is this shift happening? Versus what are the major channels through which this customer is acquired?
Sure. Uh, I see. So I think good question. So I think there are multiple elements to it, right? One dimension is, as I said, the customer part. I think the newer generation is now very comfortable with credit as a concept. Right? In our my generation or even in our parents' generation, for them debt, credit was like a taboo. They would want to stay away as much as possible, right? So I think that is something changed. Thanks to a lot of BNPL companies, pay later companies proliferating. So I think one is a customer there. Second, what we've observed is there are now a lot of embedded uh, finance is taking off, which is primarily because a lot of super apps. So big players like Paytm, PhonePe, GPay, Amazon, it and even likes of now Super Money, etc. coming in, as well as you have these big super apps, you have super fintech apps, as well as general super apps where people have a lot of trust. So two, they trust these brands to take multiple products from. So you see players like Cred, who started off basically with credit card bills, people build comfort, and eventually they ventured. Same thing with PhonePe, same thing with Paytm, basically, where they've actually made a lot of money through lending than their core product offering itself. So there are two parts. Again, the customer trusts a Cred, trusts the PhonePe, trusts the brand Amazon or a Paytm. Very good example is the Amazon Pay access card. It's the most issued co-branded credit card and hands on the most successful co-branded credit card in the by a very long margin because just purely because of the Amazon and the ICICI brand. So I think second is the entire concept of able to actually associate the customer's loyalty. Right? So I think those two are mainly drivers from a customer's perspective. uh, the other element which is more from the fintechs side is, as I was saying, a lot of them want two things: retention and monetization. If you look at all of the players, super fintech apps, as I like to call, so fintech super apps, as you want to call, look at PhonePe or any of these kind of companies, they make very, very nominal payments. So real, how do I make? I have to cross sell. I cross sell investments, I cross sell insurance, I cross sell bill payments across loans. Loans become a very lucrative because you're already sitting on good amount of data you can work with to go personal loans, cross sell consumer durables, cross sell any kind of other loans in like gold, property, car, etc. I think that's a massive from a business model for these fintech apps to also kind of become it becomes a pure monetization channel. Now there's a different cohort of fintech apps or general apps like more like Amazon. For him, it's not a way to make money directly, but it's an indirect way to acquire and retain a customer like me. Saying, look, an Amazon or a Flipkart doing an Access co-branded card, giving cashback or Swiggy giving cashback with HDFCs. Why? Because they want you to stick around, keep swiping that card on their platform, and that's their core revenue, which is more of a retention strategy for most players, right? I think that's how I would say both of them have kind of come together, and that's how you see kind of a lot of these companies, getting into lending. And lending just happens to be the one in a country like India, people are credit hungry. Two, again, due to a number of reasons, as the market has like you now a lot of digital infrastructure is in place, DPI is in place, right? Be it from payments perspective, you come in, you complete KYC in a couple of, not even a couple of minutes, a few seconds. You have DigiLocker, you have CKYC, you have Aadhaar, people are able to complete in a jiffy. You have the entire bit of a setting up mandate to UPI, to NAT. That is now both all very stable infrastructure. You get money in a few seconds through IMPS. You want to do bigger amounts, you have RTGS or NEFT comes in a couple of hours. I think the third is it's the ecosystem. Ecosystem is also where I was coming. Ecosystem is also right. You have all the elements to give a very good customer experience to these kind of borrowers. And I don't necessarily mean these are borrowers or subprime or not getting a loan elsewhere as such. But that is also the reason a lot of these companies, which are already fairly tech savvy and are already sitting on data of these customers, like KYC, they know whether Gautam actually has certain KYC, certain type of KYC I would have done on a Pay or a GPay for ABC, or I would set up a mandate. So the third is the ecosystem level shift, where these players as well as the customers, basically the infrastructure is also right. People are leveraging. And I think that is what, and I don't think it's a new shift. It's been happening. I've seen this happen in the last 5 6 years, or maybe pre-COVID is when people actually ventured. Right, most of the companies you see now right? People have already partnered with these apps or multiple products. It's just that it's more visible, but these apps have now gone more aggressive in distributing credit products.
Got it. So the people who are taking this loan, right? What is the split of people who are taking this loan but they are having a purchasing power, right? They already have that money, right? They are just taking it for their own luxury, right? Versus the people who don't have that purchasing power and are taking these loans to for some important work, right? What's the split between these? And what I feel is that probably younger people would be more like, I want to buy a Mac, no, let's take a loan, versus people in their mid 30s or something are taking it to pay off their education loan. But what does the data say?
So you are asking from what context?
The loan amount, right? So
No, I mean you are asking in Volt or in general. Got it. So for us, typically that number. So we've been very cognizant of ensuring we're giving credit to customers who can pay. Right, not to customers who don't have the propensity to pay. So we try to build that assessment. Yes, younger folks. Do have a lot of folks who are new to credit thin files, right? Might be a bit on the higher side, but it is also secured collateral where most customers are comfortable, and we are also quite comfortable. So that number, I would say, from a purchasing power or rather ability propensity to pay, I would say 90% of the customers who kind of come to us are, and also because again, the reason being that we basically give loans against mutual funds. So typically, if you look at it, people who invest in mutual funds are actually already people who have some amount of discipline. They have SIPs going on. They have savings part. So they do have the propensity to pay. The number in fact is closer to 95. But for smaller tickets, yes, I can say yes, there might be a very small percentage of customers who might not be able to pay, but over a period of a tenure of a few years, they're able to then you know build up that ability to pay and then pay off that.
Interesting. Uh, uh, the Indian fintech market, right? So I got this review, and I'm actually looking for an answer myself, right? Uh, the Indian fintech market, is it a vertical market or is it an horizontal market, product wise, right? Uh, we say that like, let's talk about investments, right? You have Univest, you have Lemon, you have Liquid, right? All these applications give you investment advisory only for stocks. For that you have different applications for FD or stable money, right? uh, there's no horizontal platform which covers all of these together, right? Is the Indian market or the customer base such that they look for vertical products, that only I only want to use Volt money for LAMF? If I want to use Paytm, I only want to use it for QR codes, right? Because I assume majority of the Paytm users are still doing it for QR, right? No one, like very small amount of people download Paytm to buy an insurance, right? It is a cross sell which they make, but the primary motivation is UPI. So how is this consumer base targeted, right? How are they structured that we are only seeing vertical apps right now, that specifically for service or specifically for something to do, right, rather than everything?
So I think that's a good question. I mean, yes, in fintech. So I think there are two set of players, right? So there are players who are breadth focus or horizontal, and which is what I was calling the fintech super apps, right? Like your Cred, your PhonePay, and Paytm, who have a plethora of offerings, where they're acquiring, as you rightly said, primarily with the customer is going to a Paytm or a PhonePay or a GPay or saying, hey, I want to make payments to customers, to no, sorry, other individuals, to merchants, etc. And then basically along the way, it's kind of getting cross-filled, and now that's how they've been able to leverage their. But at the same time, yes, there are newer age of players coming in who are very focused on specific verticals and trying to go very deep into that market. But I think Indians by default are trusted, very low on trust, and I think it's also because of the regulations. Not when I say RBI regulations, but generally the way we are a low society, very low on trust. So Indians compared to China, where you have Alibaba and WePay, right? You will not see a similar player who is doing everything. The closest I have seen is basically kind of what Tata News kind of trying to do, where they're trying to do commerce, they're trying to financing, they're trying to payments. I would say nobody. Amazon is another player. Flipkart is the only other player which has even come close to that level of be trying to do everything. So, but even in fintech, I would say yes. Most customers have very preferred associations with each app. They go to Credit Max. They might take a typical type of loan. They'll come to another, you know, go to another app basically. Come to Volt and take a LAMF. They'll go to maybe a Navi and go and take a typical personal loan. So I think it's a lot. Also is about how it's perception, honestly. But that said and done, it's something I believe with the right amount of investment, understanding the right customer profile psychology, you can acquire or basically, in terms of customers or in the time, you can acquire with multiple products. I think Credit is a good example, PhonePe is a good example, Paytm is a good example, right? Who's built multiple products within the fintech ecosystem and have multiple apps, which like apps as in products were doing quite well. Grow is another good example. People continue to invest a lot in stock in Grow. Zerodha is another example. Mutual funds as well. Now both of them are into lending as well. I think Indians are warming up to more and more multiple products, but you're right. It is still more of a vertical play.
Because we see that Zerodha ka broking platform is Kite. Then if you want to buy mutual funds on Zerodha, you go to Coin. If you want to buy baskets, you go to Small Case. You want to learn, you go to Varsity. Everything is different, right? There's no super app for to figure out all your finances. Speaking of that, what are some design principles, right, specifically in fintech, which people should keep in mind, right? What I have noticed is that fintech has a different sense of design. You can't make it too clutter, you can't position some things on at some places, right? So in your experience, uh, seeing from a user journey, right, you might have seen many funnels, you might have seen many user journeys, right? You might have created many user journeys. What are some fintech principles which anyone should keep in mind while designing anything in finance?
Sure. So I think, most of them are very first principles thing, which is applicable to non-fintech as well. So first thing first is in fintech, you need to understand you are dealing with very sensitive things. One, customer sensitive data, which is PII. You are dealing with customer span, Aadhaar, similar data points, KYC. You're using their bank accounts like a right account aggregator or mandate, etc. Or you're like in our case, pledging the lien marking their collateral, right? Or in the case of unsecured, right? You're basically you have the right to kind of tomorrow set up mandates. So very core thing what boils down to is that trust. So I think first and the foremost design principle or anything I've tried to incorporate wherever I've worked is what is it that the customers are looking for, right? Which will what is it that customers what can I do to build trust in the customers? Because end of the day, I want the customers coming to Volt or any to be not be worried that hey that Volt is running away or its partner will run away with the collaterals that they're going to lean mark or pledge. So I think trust is a very critical principle. Second, I think which is a general one is transparency. I think which is again kind of a lever for trust, but in a product, in any fintech product, and again this is also more truer for slightly more senior or slightly mature audience, which is more 30 plus, which has mostly interacted with banking in a traditional manner or the offline channels or through bank apps, etc. I think a lot of the as a fintech, you have to understand that you are trying to do something differently in terms of journey, which people are not necessarily from a mental model perspective used to it. You have to be very transparent why you are doing a journey or why you are doing what you're doing. Why you're asking. It need not be very granular, but try to be as transparent with your charges, your fees, your process, operationally, right? FAQs. I think second element which becomes very critical is try to be as transparent with customers. When I say it should not be a fake transparency for the heck of it, or just because regulations require you to do it, but be genuinely transparent. Customers will appreciate. Third, which is I think the single most important thing, even not just from customer but as a business, is being compliant. Right? In any fintech, in anything, end of the day, you are in a BFSI space. So you are regulated by RBI or by SEBI or by IRDI. And you might want to build all the fancy, cool journeys, but the hard fact is that you have to be compliant. You might be doing non-compliant stuff for maybe a year, couple of years, but it's going to catch up to you. Karma is going to catch up. So the whatever guardrail, whatever thing you're building, build with the baseline that you want to be compliant, and preferably compliant on day one. Yes, you might lose certain amount of customers, but I think with the right mindset, with the right first principle thinking, design, experience, you can mitigate as much as possible. Otherwise, it's just going to come to haunt you. There have been many instances, I'll not take names, where regulators have debarred them, onboarding customers, issuing new loans, cards. So I think this is very important. Third. Fourth is I think operational stability or processes. From product, I think a lot of PMs tend to forget that in the end, what really matters to customer is how well you give them good support or service. It's not just taking a loan, just making an investment for forgetting. What people, let's same thing goes back to trust. How do you enforce it? You have to give them that comfort factor that hey, look, my collaterals are safe with gold and its partners, right? My money basically, I this is my money in a way, right? How do you give them that comfort, right? That entire support. They have queries, reach out. Indians by default want to talk. Indians by default want to listen to somebody tell that look, nothing is going to happen to your money. It's safe with us. I think that those kind of support. When I say support, I don't necessarily mean just doing call support, chat support. It's about intention to actually build that comfort. Once you have completed the sale, becomes very critical. And have very strong operational support in terms of customer support, grievances, and especially when money movement is coming in, we work in an ecosystem where failures do happen considerably. To build a strong, robust back office. When I say back office, make sure you're building like journey is just one part, which is like as I say, tip of the iceberg. The real deal is underwater. So build a very strong platform where you're able to reconcile transactions, where you're able to quickly give a view to the customers in case of there is anything happening. I think what most customers in this space want to know is something is not going on well. They at least want to know what is not happening. When can I expect resolution? I think those are two baseline criteria to do a good job of my support. So I would say these are my principles. I think, and rest all is just like I think everything else can be modeled on.
So this is something which I've heard from people also, and also learned it that fintech एक ऐसा space है where you can't play grey. You either be white or be black, and it's preferable that you be white. Your speed might be slow, right? आपका जो gestation period है, it would go long because compliance is very boring thing, right? It takes money, it takes time, but it will give you value in long term, right? That is something what I have also learned, right? We'll move to the last segment, the last question, right? What's next, right? In terms of the industry, what do you think? What are one or two or a couple of things which are starting to bud in the fintech sector? And secondly, what's next for you? What's your state right now, and what are you looking at 5 years, 10 years down the line?
I think two very different things. Uh, so I think fintech has evolved very fast. To be honest, to the point where honestly I'm myself also thinking like where are we headed next? I think now with a lot of genuinely AI related use cases etc. I see a lot of one trend which I definitely see is a lot of emphasis now is going to come in the entire back office operational side of things. So even in fintech, uh, especially in the banking ecosystem, payments ecosystem, not a lot of emphasis has been paid in building a very strong, robust operational framework. So I definitely see more and more companies coming in to, you know, plug in those challenges, those solve those problems, the back office infrastructure, SaaS side especially, not just for fintech companies, but also build fintech SaaS, B2B SaaS for banks, for enterprise companies, right? So I think that is something which I definitely see, right? And when I say, and it includes even customer support, etc. And it's not about eliminating. I think too many people tend to think AI is used to remove customer support operations. The way I look at it is about augmenting and making it 10x better, right? So I think that is a trend I'm definitely seeing more and more, like fintech getting into. Second is, I think, kind of we touched upon verticalization, specific niche, lot of niche use case coming up, right? Where now a lot of product innovation, I wouldn't say has happening. Definitely, product innovation has stopped. To be very honest, there's not a lot of actual core product innovation happening in fintech or in BFSI space for a number of reasons I'll not talk about. But a lot of, from a distribution perspective, I see more and more fintech now going into very niche use cases, differentiating themselves on distribution, differentiating themselves from a target segment perspective. So I would say, which is very verticalizing, right? You building, let's say, going after the actual beyond the top 20, 30 cities. Fintechs which are now going after like maybe a limited but very focused population, let's say Gen Z youngsters, trying to cater to them. There is folks building out fintech specifically for mid-sized companies, the entire end-to-end reconciliation systems, etc. Right? So I think as an economy as we mature, as our metrics move in the right direction from income from a GDP, right, we'll see more disposable income coming up from companies or individuals who would want to basically improve their own productivity, right? Improve their own P&L. And that is where I see a lot of tech coming up, which is verticalization for healthcare, fintech, health, commerce related, checkout kind of financing kind of product. Payments is another, building very specific payment capabilities for it. So I'd say those are the two trends I see. There are other mega trends which is around fraud and all, but I think again kind of those have always been there. I think it's just going to, again the third thing is frauds are expected more, be it payment, be it in lending, be it in insurance. People will continue, especially with now with AI and a lot of it coming up. Expect more frauds. So I think build more risk mitigants, build guardrails. Is yes, as you rightly said, yes, you might not be able to give the most immediate gratification to customers, and you might even lose some customers because of it. But at least try to financially protect yourself from those frauds. So I would say these are the three major trends I'm seeing. There would be more. I still like to think I'm learning along the way.
And what's next for you?
That's a good question. I think, as I said, I think I'm at the stage now where I myself am asking that question to myself, like, what do I want to do? I think now we are, I mean, at the company right now, I am now we're now growing exponentially, setting up team. I have historically worked in a very managerial plus an IC kind of a role where I've spent 60%, 60 to 70% in a managerial role, 20-30% again, right? Spending where I was directly doing certain strategic initiatives, leading startups. So that's something, that number is now tending managerially more towards 90-100%, where I'm more managing people, managing other managers who are managing my PMs. I think that is something I think I am also learning. For me, it's now a learning curve. How do I kind of manage a team of 15, 20 in product design, etc. Right? So I think for me that is one. How do like so I've seen that 0 to 10, 1 to 0 to 1, 1 to 10, 10 to 120. Now for me, I want to now experience the 20 to 100, right? That is one of the that's what I'm looking from product, from design, business, growth perspective. I would say that's where I'm looking for. And as I said, yeah, on the side, along the way, I'm making sure that I am being true to my family, and especially to my son, as a good father. I think that's what, of course, all of this without sacrificing health and mental peace. I think that's what next for me. Yeah, I think it all boils down to happiness, right? I think what is you have to be very clear. What is your definition of satisfaction in life? What is your definition of success? What is your definition of, you know, contention? What are you happy with? I think you should learn to let go of certain things. You should learn to embrace. what you believe in. I think it all boils down to that. Different people have different definitions. I'm still figuring out, to be very honest.
On that note, it was nice having you. And
Thank you.
any reviews which you have of the conversation we had, like any.
I think it was a very interesting conversation. I think very diverse topic. Been a while since I did it. Yeah, looking forward to more interesting conversations, hearing from very more esteemed folks and learning from them along the way.
Thanks a lot.
Thank you. Thanks, Ray. Thank you, everyone. Good day.